Good afternoon, YouTube. All right, I'm going to be doing a dual usage. I'm going to go on my phone and I'm going to do this live stream from my laptop. So I'm going to wait till I get some viewers.
When bikes meet our labs, things start to take off. You'll be tested in the classroom so you can thrive in the field. With MMI, you'll do something you love and get qualified while you're at it. To see the partnerships and programs that are available, visit mmitech.edu today.
Okay. I'm going to wait till I get a couple more viewers on my live stream, and then I'm going to go over some of the thoughts about the wait till I get a couple more viewers on my live stream, and then I'm going to go over. Okay, I got 3 viewers. Some of the thoughts about these. So let me go ahead and begin to share my screen. Okay, I got 3 viewers. An application window. So go ahead and begin to share my screen. I'm not going to share that part. That's not what I want to go to. First thing I'm going to go to is CNN.com because there is a link and it's going to show you what the effects it will have. And it's like you answer some of these questions. Oh, I hate this. Now, on CNN.com, it says calculate how the tax bill will affect how it affects you. Now, all this is contingent upon what your filing status is. Now, this is what you can use this calculator to see how the tax bill will affect your paycheck. Now let's go ahead and begin. This is the income levels in which the IRS has it in terms of what your tax bracket will be. 0 to 20K, et cetera, et cetera. So let's say, for instance, you itemize. Do you itemize? Now, in my case, I itemize, so I would hit yes. Have this certain states. This tax bill is going to affect people in certain states who pay high property taxes. New York, New Jersey, California, DC, Connecticut, Oregon. So I would say nope, and I file single. Oops, let me go back. 0 children, single. Hate this. Uh-oh. Let me click back on. Let me go back. I'm sorry. So say most of us that work in these gig economy jobs. Let's be realistic. Let's say we make about 20K to 40K in that range. You itemize. I file single. No children. I don't live in any of these high states. What's going to affect, as I was mentioning, is individual tax returns and people who itemize. What the changes that they were speaking of, and they're going to phase in and phase out. First of all, if it's going to start in 2018, that's the point I was making. When Trump signs that bill, it's not going to take effect on this year's tax return year. Let me go back to the it's too much of an echo. So when Trump signs the bill, it's going to be for next year, 2018. So for now, we don't have to worry about what's going to happen this year. So one of the things you want to look at is to go to this screen. I already did it yesterday. But okay, let me see. Let's get changes to no. Well, I'm gonna start all over. All right, let me stop sharing that screen. Okay, so one of the things you want to do first is go to that CNN.com, click on the calculator, answer those questions. When you answer those questions, it's going to give you a brief overview of what the changes is going to do to change your that's going to affect you tax wise. When I did mine yesterday, it says that my tax will be increased to about $1,000. Now you may say, well, that's not a lot, but it's not going to affect you as a ride sharing person or a person who are independent contractors. This change in tax overhaul is going to affect those who are employees. So let me go ahead and pull up some of my notes. Oh, they switched my area to Buckhead to Sandy Springs. Okay, that's another video altogether. All right, bear with me for a moment, y'all. All right. And I'll probably do a video, not live. I'm not going to live stream this, the video I do next. I'm going to actually do another video, and I'm going to share some viewpoint. No, you know what? I'm not going to do that. I'm going to write it in my blog. I'm going to go to my blog and write it. 1099taxes.wordpress.com. So for now, I'm just going to do a brief overview about the changes within the tax bill. Now, this tax bill really affects you as an employee, not an independent contractor. So please do not get in this hysteria that, oh, I heard that we won't be able to deduct, make the deductions like writing off our gas and writing off mileage and everything. That's not what this tax bill is going to affect. It's going to affect the Schedule A, itemized deductions. One of the changes that's going to happen is that if you itemize, now let me give you my issue, my situation, because everybody's tax different. Everybody's different. When I bought my home, I was able to deduct my property taxes, real estate taxes, and state income tax. Certain states have higher income taxes than others. Florida, Tennessee, and Nevada, and there's some other states. You don't pay state income tax. So that's a good thing. However, for those who live in those other states and the states that I mentioned, New York, Connecticut, Washington, D.C., Oregon, you pay high property taxes. The property taxes that you pay on your house, some states are way higher than others. However, if you pay property taxes, you won't be able to deduct the property taxes. Well, put it this way, you could deduct the property taxes, but they put a cap on it. Some people pay $15,000, $20,000 of property taxes. So now they're going to put a cap on the property taxes. And it's going to affect those who live in those states that pay high taxes on the property taxes, and they're going to put a cap. Now, for me, I have to I won't be able to deduct my property taxes. It's going to be capped off at a certain amount. Now, I live in a state, property taxes is, my property tax is about what, $1,500 a year. So I'll be able to put that property taxes on my Schedule A. You also are able to deduct the income taxes that you pay, sales tax. That is going to be eliminated. So if you're not able to deduct on the Schedule A is limited. It's limited by a certain percentage of your adjusted gross income. Schedule A are used primarily for those who are employees. So let's go over some of the things that I've researched, and I'm going to go over this. Now, this bill, tax bill, was supposed to create incentives for those who are self-employed. That means if you work for yourself and you're a company or a corporation, you have incentives when you hire subcontractors instead of employees. So let's look at it from 2 points. Uber, Lyft, Grubhub, DoorDash, IBM, whomever, Live Ops, all these companies, they're not hiring employees. So they say, okay, we're going to outsource the jobs. They're not going to send it to India. They'll send it to India and all that kind of stuff, but they're going to hire people as self-employed, 1099. And as we know, the benefits of companies hiring people as independent contractors is because they don't have to pay insurance, they don't have to pay in Social Security, Medicare, Medicaid, whatever. They don't have to pay for that. However, as a self-employed individual who are 1099, like ourselves, we pay for the taxes. So all this hysteria about we won't be able to deduct the mileage, and we won't be able to deduct the gas, and we won't be able to deduct whatever on your tax return, that's secondary. The first thing you have to determine is line 7 on the return. You put in all your W-2. Then on the next line, I think it's line 8 or whatever. Don't quote me on this because I don't have a form in front of me and the forms will be changed. Then you're supposed to include your self-employed income. From the self-employed income, people are able to deduct certain things to lower their total income. If you're a student and you pay student loans and you have student loans, you was able to deduct $3,500 of this student loan interest you paid throughout the year. That's being eliminated. You can no longer deduct student loan interest. That's gone. So as a student paying back loans, you were able to deduct it. That's eliminated. Another thing that's being eliminated is as an employee. Now, say for instance, when I work, let me give you my story. When I was working at the IRS, we paid union dues. And you were able to deduct the union dues off your tax return, which is on the Schedule A. You won't be able to deduct union dues. Say you work as a police officer and you pay for uniforms, anything related to your job. Anything related to your job, and the employee did not reimburse you for those expenses, you can't eliminate that anymore. Another one, teachers. Teachers don't get any kind of incentive from the school districts or whatever. So they have to buy school supplies, materials for them to do their job. teachers were able to deduct up to $250 of school expenses off the tax return. You won't be able to deduct that. So you see where I'm coming from? I have not spoke anything about what does it do for self-employed. So that is what is being taken away. Is if you as a wage earner. Now, so if you are an employee, and it's going to eliminate the employee business expenses. Employee business expenses is done on the Schedule A, not Schedule C. Now, you may say, well, how is that going to affect 1099 subcontractors? This is the part where I've always knew it's going to come back. I assure you, it's not going to come. It's not going to be mentioned this year. And most people are going to argue, well, we're not employees. We're we're not employees. We're independent contractors, and we should be able to deduct the business's expenses. But let me tell you what's going to happen. All these lawsuits where people are suing Uber and all these ride-sharing gigs, and their dispute about who's employees, who are not employees, and are you being misclassified as an employee? We should be our own. We should be employees because all the rules that the companies implement as to what you should do as an independent contractor. And in some states, I know Massachusetts has a very liberal policy that how they had to change those, like Instacart, those employees had to be paid in the lawsuit because they were being misclassified based on state law and employment law. And truly, they had to make some changes, that they had to hire these people who were independent contractors to be shoppers as employees as part of the lawsuit. So some people won cases that they were truly not independent contractors, but they were employees. So what's going to happen is that if these companies, particularly Uber and Lyft, well, I know Uber for sure, they don't pay corporate income tax. So those billions of dollars that they get these incentives from the state to operate their business in the state, to open up at the airport, and they getting all these tax breaks and these tax incentives from the state. Who do you think is paying for that? Who do you think that money that's being paid out to these companies to operate in a state, and they getting these incentives, and turn around, have offshore accounts and not paying the corporate taxes, but they charging you the fees? This tax cut, we'll put it this way, this tax changes that's happening is going to create a deficit. It's going to add on to the deficit, for real. But let's go back to the changes. So basically, business expenses as an employee is going to be eliminated, and you won't be able to deduct those business expense as an employee. That's going to be gone. Another thing, and it's going to affect people who are in the service industry, teachers, firefighters, medical personnel, whomever, you name it, it's going to affect you. Even if you worked at McDonald's and say you bought some pants to wear to go to work, or you bought boots because you're a contractor and you work in an industry and you bought special shoes and boots for your job. but your employer is not going to reimburse you back. You won't be able to deduct that. That's gone. You know? Now, and so let's go ahead further. You go to school to improve yourself and say, you know what? I want to go to school and take some extra courses to improve on my job. And let's go back to the example of a teacher. You work as a teacher and you go back to school to get your master's. If you was an employee and you went to school or you went to improve on your skill set and you paid the tuition, the fees, you were able to deduct those tuition and fees because it's related to your job. So you're not able to deduct those the tuition you paid. You can't deduct it anymore. And it's going to be based on what you've earned. So for instance, if you earn more than $65,000 as a single person or $130,000 as a married couple, education you pay on your own dime to become a better at your job, any job, will no longer be deductible starting January 1st. You can still take the lifetime earning credit, but it phases out after you reach an income level, a certain income level. So basically, classroom supplies, photocopies, incentives, classroom decorations, class party, union dues, gone. That's if you're a teacher. You're a police officer, nurse, firefighters, anything, uniforms, equipment, gone. Union dues, gone. If you're a carpenter, electrician, you can't deduct equipment, tools, supplies, none of that. Now, let's go on the flip side. So you say, okay, well, if you can't deduct all those things and you're an employee, then what can you do? They're going to hire, they're going to raise, they're going to double up the standard deductions. There'll be a higher standard deduction. Now, the standard deduction, let me see. Where got my returns? I can't find my return. Anyway, the standard deduction for single, I think it was what? $5,450. I'm not talking about the exemptions, that's the standard deduction. That's going to be doubled. So let's say the standard deduction is $5,000, just for math purposes. Then you could deduct $10,000 as standard deduction. Whereas if you itemize on Schedule A, you were able to deduct property taxes, charitable donations, church dues, union dues, a percentage of your adjusted gross income for medical and dental expenses. So basically what they're doing is that they're eliminating the itemized deductions to make it simpler by just simply giving a higher deduction for the standard deduction. Whatever your filing status is double. It has nothing to do with the Schedule C. However, companies are, what they're trying to do is they're trying to spark job growth. That's what Trump claims that he's doing with these tax overhauls. Putting more money back in the taxpayers' money, putting more money back in the taxpayers' pockets by eliminating everything on the Schedule A and itemized deductions. And companies, on the other hand, they don't need to hire people because if they're not able to get those type of deductions and incentives for employees, they hire independent contractors to do it. So the whole thing is that they really trying to give incentive for those who's able to create jobs for yourself. As we know, those jobs ain't coming back. The jobs that went overseas to Mexico and all these other countries, it ain't coming back. So most of the job economy is gearing towards ride sharing gigs, independent contractors, being in business for yourself. Being in business for yourself is what's going to give you the advantage in terms of as a tax. It's going to benefit you as a independent contractor or business. Now, whether it be Uber, whether it be Lyft, that's a whole different thing. That's a whole different ball game. But let me tell you what's going to happen. As people become independent contractors, and if they let these companies get away with these big incentives, they don't have enough people that's going to be in the workforce as employees to withhold any of the taxes to collect the tax. So where's the taxes going to be paid from? It's going to have to be paid from those who work as an independent contractor. That's where it's going to come from. But if these rules were to change as to what constitutes a independent contractor and what's an employee, if anything is disputed and we are switched over as wage earners, Uber is not going to withhold the taxes. Lyft is not going to withhold the taxes. They can, but they're not going to do it because they lose out on the business incentives. I don't know what the business incentives are in the GOP bill. I'm only talking about individual taxpayers. So as an individual taxpayer, going from a Schedule A to double the standard deduction, you're going to end up paying more. Now, let me give you my example. This is not my income, but I'm going to give you the example. Say my adjusted gross income was $50,000. And last year, my Schedule A was about $15,000, which gives me $35,000 as taxable income. And I'm exempt, claim myself with the exemption of $3,000, something like that. Then it brings my adjustable taxable income of $32,000. So taxes on $32,000 is about, $3,000 or so. So if you flip it on the other hand, if they're talking about eliminating the Schedule A, which gives me a higher tax write-off, then I'm not able to deduct the expenses, like looking for a job. Looking for a job was a tax write-off. That means all that time I was buying clothes, getting my hair done, going to these companies to interview, looking for a job, that's not going to be a write-off. They're eliminating that. Anything job-related, looking for a job, it's not going to be written off. Now, I don't know what's going to happen with those charitable deductions, but I don't think they're going to touch people paying tithes and dues to deduct your charitable donations. They may not touch that. So right now, it's going to stay. They're really talking about those employee expenses, which to me, I'm not saying $250 is a little bit of money for school supplies for teachers, and maybe the little bit of expenses that employees pay out their own pocket to do their jobs, because that's little. That's nothing. It's those property taxes in those higher states that's going to be fighting this argument. That's why it's important that you try to pay off that mortgage as quickly as possible, because you really, you're really not saving that much in your taxes. You're not really lowering your taxes that much. The quicker you can pay off your mortgage, you own the house outright, who cares about the mortgage being deducted? Because it's not that much. So now, let me see what else was there. The tax breaks is going to be for corporations, and they're going to cut Social Security and Medicare tax to pay for it. If you're an independent contractor and you do this full time, and this is your only job, it's going to affect you in the future when it comes down to getting back your Social Security. If you don't have a retirement plan or a tax shelter to shelter your money in some kind of IRA account or anything of that nature, and you're an independent contractor, you need to take advantage of that now. Only difference is that if you put that money in an IRA account, it's just deferred. You're just deferring on the taxes for later. You're gonna pay the taxes later on. That's all that is. That's all that is. But according to the years in which some of these tax credits expire, they're not. This is just the beginning. This is just the beginning of the reform. This is just a little bit. That's all. It's just a little bit. But don't worry about, we won't be able to deduct anything on the Schedule C. But just realize that Medicare tax, the Social Security tax, when that goes up, when you pay the self-employment tax, that rate's going to go up. So you may be able to still continue to deduct those things on the Schedule C, but don't be surprised and shocked when they change that. They're going to change it because as more people get into certain type of industries, they keep track of it. The reason why they ask you at the return is occupation, or they determine that this is in a ride-sharing economy, gig of jobs. They keep statistics on that. So when they look at that, they base policies on the trend. So if the trend is that a lot of people are going into these ride-sharing gigs, and you make $30,000, and then you're trying to deduct $25,000 of that to pay $5,000 of taxable income, and then they double up the standard deduction to pay no tax, that's not going to work. That's not going to work. So for now, they just, those incentives that they've been giving out as a wage earner is being effective. Now, the next thing they're going to do as a reform is going to be welfare reform. Right now, they didn't mention anything about changing the child tax credit. If anything, they're going to double that up. So if you have a child and you get the child tax credit, that's more money for you. But you can kiss that goodbye, because they're going to eliminate that. They're not going to continue with that. See, they're not going to touch certain things for now, because that has more to do with welfare reform. And that's going to be done next year. I can assure you that's going to be done. Now, let's talk about the healthcare entitlements. Now, how is that going to affect you if you have signed up for Obamacare like myself? Now, because I already signed up, I didn't pay the premium yet. I still got it till January 1st. I'm going to wait till the last minute to pay because I want to make sure that I don't sign up for something that they're not going to give. If they're not going to give the premium tax credit to cover my health insurance for this year or next year rather, then I might as well find a way to get insurance on my own and try to make enough money or enough income and buy insurance. And then I'm able to deduct that on my own too. If I'm able to deduct the insurance and I pay for it outright on my own, then that's a business deduction you could take on the Schedule C. Because what they're really trying to do is they don't have a problem about giving coverage to people. The problem is they don't want to subsidize health insurance by lowering in the cost. If they want $500-$600 a month in premiums for people to pay, and they say, well, you could pay $50, we're going to subsidize the rest. The government don't have any money to do it. That's the problem. That's the big debate. They don't have the money to actually subsidize health insurance. And this country has a health problem, not an insurance problem. If everybody was healthy, if everybody in this country was healthy and everybody didn't have any health issues and people weren't going to the doctors and escalating the medical costs, trust me, it wouldn't blow up the way it blew up. Years and years of neglect. You know, it costs less money in preventive care than it is to treat someone who has, say, diabetes and it's a progressive disease. That's why you have to take care of yourself physically. The more you could prolong the illness, the longer you could prolong any type of progressive disease, the less it costs. The less it comes out of your pocket and the less it comes out of the employees' pockets. That's why companies are not, they thinking they trying to spurt some kind of job hiring. Companies going to start hiring people, but that's the opposite. They're not going to hire more and more people. They're going to just get people to work for themselves, be a 1099, self-employed or independent contractors, so they don't have to pay insurance, they don't have to pay Social Security, they don't have to pay into the Medicare tax, none of that. None of that. So before y'all make any videos about the GOP Tax Bill and, they're going to take away our ability to deduct the business expenses on a Schedule C, you're going to be able to deduct it, but it's going to be limited. They're going to put a limit. They're going to put a limit on that. So if I were you, I would file a business return. Don't file a return under your Social Security number. Unless you're a sole proprietor, you have no employees, you have, most people who work, do Uber and all that stuff, you don't need to you don't need to file a business return. You're a sole proprietor. It's only you. Your only asset is your car or liability because, your asset is your car. But they'll make changes in regards to how you're going to report it. But right now, they just put this bill together quickly just to eliminate only one part of it. This is not finished yet. I could attest to that. It's not done yet. They're going to roll out this next year in 2018. But the whole entire thing is to eliminate people having to be covered under insurance. That's the whole thing. This whole thing has to do with that. It's for companies to not hire people, putting people as independent contractors, so they don't have to have the responsibility to offer insurance. That's all that is. Subcontractors, independent contractors, you're not entitled to get sick pay, family leave, health insurance, workers' compensation, vacation pay. None of that is what these big companies are trying to not pay. And the tax incentives or these tax laws is going to affect those who are employees. Point blank, period. That's it. So what do you do as a independent contractor, subcontractor? What is it that you could do? If me, I know what I'm doing. I'm not gonna put Uber, Lyft, and all these ride-sharing gig jobs as my own business. That's just a little ways for me to make a little bit of money and filter my own business, whether it be a consulting business. In my case, it will be a consulting business, and my travel agent business. I also got that on the side, which I'm doing on the side. Take your expertise and what knowledgeable thing that you know and create your own business. Whether it be a YouTuber, and I'm gonna open up a Patreon account, and I'm going to offer paid content on my channel. And I'm going to be very thorough and more professional in terms of offering my services, but I'm going to do it separate. So what you do is you start your own business. Register yourself as a business, as a consulting firm with the state that you reside in. Get yourself a federal tax ID number, open up a business bank account, and do it yourself. Even if you put something down and say, you know what, I'm an independent contractor, I'm a driver, I do, we've all been working for Uber and all these companies probably about a year and a half, 2 years. Some of y'all may not want to do it, but that's fine. Everybody's not meant to be an entrepreneur. Is offer services and tap into find a problem, figure out a problem, and resolve that problem and start your own business. Because obviously these tax changes and rules is really affecting you as a person who is wage earners. All these cuts and things that's going on is affecting the middle class, working people. That's what all these changes are about. So let me see. Let me see, what else is this? So here. Now, these incentives, well, not incentives, I hate to say that. It's really meant to cut Social Security and Medicare benefits. All of us, if you ever worked in your lifetime, if you live long enough, there's Social Security and Medicare. Those are benefits that you're entitled to as taxpayers when it's time for you to get it. I don't know what's going to happen 15, 20, 25 years from, all I know is from a personal experience, when my grandmother, they get Social Security. And every year, they always give an increase of extra Social Security benefits you get. And it's like a raise. But now that they are cutting it, so rather than somebody getting $1,500 a month in Social Security or $2,000 a month, or whatever it is, I don't know. I haven't looked at my Social Security benefits to see what I would get if I get to a certain age. I don't even look at it anymore. If they decrease it, that means you get less money, and you only get Social Security once a year. I'm not talking about SSI either. I'm talking about Social Security. If you get Social Security every month, like my grandmother gets one every month from my grandfather, when he has Social Security, as a spouse, you get almost double the amount. If you're married, if you're single, then you just get half of that. So you don't really get as much. That is what it affects those who are getting the benefits now. From years and years of working till now, they're going to get a decrease in the Social Security. They may say, okay, my Social Security check is $100 less. So I don't know where the tax base of monies is going to come from. Because if everything is changed over as self-employed, they're not going to continue to allow all these deductions for long. I can tell you. Next year, let me tell you what the two changes that are going to happen. Welfare reform, and they're going to change corporate income tax. But for now, the big companies are going to benefit from it. For now, small business owners, if you classify yourself correctly, if you classify yourself properly, then you really want to don't try to put both your Schedule C and put it in with the Schedule A and file it. Next year, when we all start our new year, think about what you want to do. Because me personally, I'm going to switch my entity from sole proprietor, independent contractor to an LLC in a business and take advantage of those corporate breaks. That is what you do to eliminate all that, worries. So I'm not going to make long on this. I'm not going to be long on this video. And I'm going to write this in my blog. I'm going to write it. I think I'm a better writer, and I'm going to write it. So Scott, thank you for the suggestion. I'm going to go ahead and look into that reporter and see what he's talking about. If I get interviewed about it, I will give my viewpoints and represent very well. I really will. But I'm going to wait because, like I said, until that Trump, who's a chump, signs it into law, we don't need to be worried about, oh my God, we can't do this. Oh my God, we can't do that. No. It ain't going to take effect till next year anyway. So I'm not going to worry about it. And next year is going to be midterm elections anyway. So all these tax law changes is not a law, it's an act. And it could always be rolled back and repealed. So all this lip service that we are hearing, oh, if they're going to change, this is going to happen. Come next year, if it change over to a Democratic House, and they're going to turn around, if Trump doesn't get booted out first, or something disastrous happens to him, eating all those McDonald's and junk food that they said that he does, and he doesn't get some kind of heart disease by eating junk, because he get a little bit fat. Trump was not a fit man, but I was like, man, he can put on a lot of weight. He only been in office for a year. All they're gonna do is he ain't gonna run for office again if he doesn't get kicked. He is not gonna get office again. So all they're gonna do is repeal all those things that he's been doing on his term. And next year they're gonna repeal it right back. They're gonna go back. They've done it with Reagan when he had the biggest tax cut. This would have been 30-something years of no kind of tax reform. Reagan did the same thing. They did all these cuts. They thought everything was benefiting for anyone. And then what did he do the next year? He raised taxes. Then they turned around and rolled back and repealed after he got out of office. So the same thing gonna happen to Trump. Same thing. But for now, don't worry about it. Don't worry about it. You're going to get the basically in a nutshell is the standing deduction, whatever your standing deduction is, it's going to be ×2. And if you do a Schedule A, you got to choose which one's going to give you the greater advantage. They're going to put a cap on property taxes. They're going to put a cap on the state income taxes you pay. If you live in a high state, then, if you don't live in New York and all those other states, and you don't pay, and you don't have a house, you basically a regular old Joe or Susie or Rachel and Teresa and Scott and Michelle, it ain't going to affect us that much like that. So don't get in an uproar. Don't get in a panic. Don't get into no kind of, oh my God, it's going to affect us. No. You're still going to get the Obamacare medical insurance for next year. They're still going to pay. And then when next year come around for the year 2018 tax return, then that's when it becomes an issue. But like I said, all Congress is going to do next year is repeal it, change it back. The teachers union is going to be strong. They're going to oppose all these changes. They're going to have all these groups of people and lobbyists that's going to go back, and they're going to turn around and repeal it. That's all. So that's my thought on it. But go ahead, and I'm going to write my blog, put it more summarized, and put it in more concrete figures. And another thing I want some of y'all to do, yes, if you want to do it. Well, that's what I'm going to tell you what I did. I enrolled at the IRS.gov and subscribe to the newsreels of any updates that comes up. And when there's updates, I get the email and I get the sources and read it. So I signed up yesterday. There are several agencies you could do that for. I signed up for the SBA, different local state taxes, websites. So when they have updates and they have changes, I could get it and read it. So I said it was going to be long. And everything is still pretty much new. But like I said, nothing's been signed unless they signed it within this hour and I didn't know about it. But Trump is not going to sign that bill into act until next year after Christmas. So Merry Christmas, but don't worry about it for this year, because if it's not signed and it's signed next year, it doesn't take effect until the following year after that. So everybody who deduct and do all those deductions and everything else, I hope y'all got your records straight. But if you want to use my services for next year, let me know. Send me a message and we could go and I could work with you one-on-one. But for now, don't listen to people who make these outlandish stories and not research and not look into the matter. It has nothing to do with Schedule C. Nothing. Nothing at all. So I'll wait for the comments once I review it, but I'll talk to you later. Bye.